Hey there, this is Arthur Hill, Chief Technical Strategist at TrendInvestorPro.com. You are tuned into Next Level Charting. Thank you very much for joining us. I appreciate it. If you're watching this video on YouTube, and you like it, of course, please give us a thumbs up and consider subscribing. So today we're going to start with two recent trend composite signals, one bullish, one bearish. Then we're going to look at two tech stocks setting up bullish within bigger uptrends. And I'm going to show you why I think this pullback in SPY is just a little bit different. So I want to show you a couple of recent trend signals and how they came about. And what I've got here is I've got a chart with 5 individual indicators and then the trend composite. And what the trend composite does is it aggregates the signals in the 5 individual indicators. So if we look down, we can see it's currently at +3. So that means that 4 indicators are on a bullish signal and 1 is on a bearish signal. So 4 minus 1 is a net of +3. And since we're down in this lower right-hand corner, if you go to that plug-in icon, there you can see the plug-in Trend Investor Pro Indicator Edge plug-in if you want to know more about that. Now I'm going to go over to the upper left corner and I'm going to click on the chart settings and we can see these individual indicators that make up the trend composite. And so we've got Bollinger Bands 125, 1, and then we've got Keltner channels 125 to 125, and you can look up the individual indicators if you want to learn more about the settings. But I'm basically targeting a 6-month time range for my trend signals, something in that 4 to 6 month time range. So Keltners are blue, light blue, Bollingers are pink or rose, however you want to call it. And then the other indicators we've got is we've got the moving average direction, moving average trend, and that's the 5-period rate of change of 125-day moving average. And then we've got Stoch close, which is a 125-day stochastic oscillator based on closing prices, smooth with a 5-day moving average. And then we've got the commodity channel index, again, 125 days. So all of these are set at 125 days, which is around 6 months. And that is because I'm looking to capture a trend that is in that, what I think is the sweet spot, that 4 to 6 month window. So if we look here, we can see that this is booking.com, and the trend composite at the bottom was bearish in mid-July all the way to mid-September. And then we can see it turned bullish. And the reason it's turning bullish is, first of all, we had that move above the upper Keltner channel line and the Bollinger Band. So that got 2 indicators bullish. And then we can see the direction of the moving average. The 125-day moving average turned positive, green there. And then we can see Stoch close moved above 60 to trigger bullish. So that is 4 indicators basically triggering bullish. And the only one that is yet to trigger bullish would be CCI close. It's the commodity channel index based on closing prices. And if it gets above 100, that's the signal that a new trend is emerging. So that's how an uptrend looks like if it's emerging. And then the other one I want to show you is going to be a new downtrend. And this is in Honeywell. And Honeywell is an old school industrial stock. And we can see here at the bottom, the trend composite got to -1. And that is because Stoch close moved below 40, turned red and bearish. We can see the CCI close moved below -100 to turn red and bearish. And then we can see that the price moved below the Bollinger Band low there, the low of that Bollinger Band channel, if you will. It didn't go below the Keltner channel, but that's 1, 2, 3 bearish indicators. And we have 2 that are still positive, Keltner and the direction of the 125-day moving average. And so that means 3 bearish, 2 bullish. That's a net of -1. So these are 2 very young trends that have started, and that would seem to say industrials are unfavorable right now, and maybe travel stocks are getting in favor. And let's look at those in a little more detail, especially Booking.com. So here's a chart of Booking.com, and we can see that there was a big decline from April into August, and it formed a big falling wedge. And what's interesting is you have this big advance here, and you have a pretty long correction. And this was a long correction, 1, 2, 3, 4 months, and that was enough to turn the Trend Composite bearish there. But we can see here that we had a breakout with that big surge in the middle of August. And then a couple weeks later, we got the Trend Composite turning bullish. As you can see, we held above the breakout zone. And with the big move today, all 5 indicators are now bullish. We can see that changed since I started talking about it. So this could still change based on the close, on where it closes on Wednesday. But there is a clear breakout here and some strength in Booking.com. And what we have here is a broken resistance level, and that turns into support. So if we do get a throwback to that 2300 level, that might be an opportunity to play a mean reversion pullback, so to speak. Now, sometimes we get stocks that are already in uptrends and they make big moves and we miss the signal, so to speak. Like here's Advanced Micro Devices, and there we can see the Trend Composite turning bullish there at the end of June as it broke above that high there with that big move. And then you had this little pullback. So there was a nice flag-like pullback after the breakout, and then this was the big breakout to catch with this big move higher. So now what we have is a pretty extended situation in early August. But if I look at the structure of the chart, it's still bullish. And if I look at this pattern here, it looks like a big wedge. So, well, not that big, but not as big as the Booking.com wedge. But there's a big surge. There's a pullback. We're at the 50-day. We're reclaiming it. And a breakout there is going to be bullish for AMD. Now, another one I want to look at is Snap. And I don't mean, oh, Snap, like a trend line broke. I mean like Snapchat, which has been performing quite well. There is Snapchat, and we can see that its Trend Composite has been bullish for a long time there in the indicator window. I've got the Momentum Composite, and what's that? That is used to identify short-term oversold conditions when it hits -3. So I'll put on the crosshairs so you can see. So there it hits -3 in, that would be in early March, March 8th, and we get a bounce. It's -3 on March 24th, and we got a bounce. And then if we go forward, it hits -3 in early May, and we stabilize and then get a bounce. But if I look at the chart structure here, you know, Snap is in an uptrend. And it looks like this is a bullish consolidation within that uptrend. And you can see here, there's a big surge. We consolidate, testing that 50-day, it's rising, and now we're breaking out of a wedge. So that looks like a bullish breakout for Snap Inc. Now here's a more recent example where we have an oversold condition and a bullish setup in a chart. This is Trade Desk, which is cutting edge technology software. And it was in a downtrend, you know, from late March all the way until June. And then it got this uptrend signal. And so you don't have to always take an uptrend signal right away. I mean, a true trend follower takes the signal and just absorbs any pullbacks that occur along the way. But you might want to wait for a pullback. And there are 2 ways to do that, to identify a pullback. One is with a chart pattern, and the other is with an indicator. And this is the Momentum Composite, and I'll put the cursor back on here. So we can see here that the Momentum Composite gets to -4 there on the 8th of September, and prices in the low 70s. And we kind of stall around, hit another -4, still stalling. And so there's a little bit of basing going on. And I'm sure if you put your Fibonacci retracements on here, this would be about a 38% retracement. That's my guess. You know, we don't need to be exact on this. And then if we put on some price, some trend lines here, we can see that there's there's a bit of a falling flag channel type thing working here. So you have this pretty big advance. You have a correction that retraces around 38%. And we do have a little resistance level to watch here with these two highs. And it looks like we're breaking out here for trade desk and poised to continue the uptrend. And that's pretty much all I do is I look for stocks that are A, in uptrends, and B, that have some sort of bullish continuation pattern working. And the way I identify that is with an oversold condition using the momentum composite. It got to -4 twice here, and or a pattern such as a 38% correction, a retracement of the prior advance. A typical retracement's 1/3 to 2/3, 50% being the base case. And so that's what we have here. We have a big advance and we've retraced around 38%, firming, and it looks like we're breaking out again, and trade desk is attracting some buying interest. So I put out a commentary on Tuesday and I addressed the pullback that we had in SPY. And my question was, is this another just, 3 to 5% pullback that's going to last a couple of weeks, 1 to 2 weeks? And are we going to resume higher, or is it going to last a little bit longer? And I want to show you the chart from that commentary here that was posted for subscribers. So this is, I created this chart using Amy Broker, but there's the momentum composite in that first indicator window, and then RSI in the second indicator window there. So if you look at the prior pullbacks of February, March on the price chart, you can see they lasted just a few weeks, formed a little flag. The May pullback was like 2 weeks, formed a little pennant, and we got breakouts on both of them and continuations higher. So they didn't last very long, these pullbacks. And you can see RSI did not go below 40 during these pullbacks. And if you look at the current pullback in RSI, you can see it went well below 40. It turned red. My RSI turns red when it goes below 40. And you see the momentum composite got to -5. So that tells me that this pullback was deeper than the pullbacks we had in May or in February and March. And because of that, I think it's more like the September pullback. If you go all the way to the left on the price chart, there's that September pullback. And if you look at RSI, it turned red because it moved below 40. And then we got a bounce into October, and then we got another dip. And so all told, that correction lasted around 7-8 weeks. And I think that's what we could be in for now, is another correction that lasts more than just 1 to 2 weeks or 1 to 3 weeks. It might be more of a choppy affair that lasts a little bit longer because there was more selling pressure this time around. So check out trendinvestorpro.com if you want to read that commentary and also see some of the most recent signals, trend signals in our core ETF list, which has 129 ETFs. So if you'd like to know more about trendinvestorpro.com, you can click on the link below in the description. Again, if you like this video, please give us a thumbs up and consider subscribing to StockCharts. Thanks again for tuning in. Have a great day, and I'll talk to you again next week.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.